Hello, I'm Ben Wattenberg. The stock market is way up, inflation is way down, unemployment is very low. Is this just an uptick in the business cycle, or is something new going on? Joining us to get to the bottom line are Herbert Stein, former chairman of the Council of Economic Advisors under President Nixon and a senior fellow at the American Enterprise Institute, Alan Reynolds, director of economic research at the Hudson Institute, and former vice president of First National Bank of Chicago, Charles Schultze, senior fellow emeritus at the Brookings Institution and also a former chairman of the Council of Economic Advisors, and James Glassman, the Reader's Digest fellow at the American Enterprise Institute and a syndicated columnist for the Washington Post. The topic before this house: is the boom permanent? This week on Think Tank. The stock market has been soaring. Since 1991, share prices have tripled. But does the stock market reflect the real economy? After all, Wall Street has misread the economic tea leaves before, sometimes with disastrous consequences. But in the last few years, the American economy has been expanding more vigorously than usual. And the super bulls say it's no accident. They maintain the world is being transformed by new political, intellectual, and technological currents. They believe that America is uniquely prepared to rule those new waves. Just look at how much has changed in the last decade. The Berlin Wall fell, the Cold War ended, democracy spread, and it turns out that peace and freedom are good for business. The death of communism wilted the appeal of planned economies. Global enthusiasm for free enterprise and free markets bloomed. Privatization, deregulation, and international trade are the watchwords of most every government these days. All of this coincides with an ever-expanding tide of scientific innovation. New products have created whole new industries, and improvements in transportation and communication have cut across all industries to make all commerce more efficient. Mix and stir, say the optimists, and you have a recipe for a new American economic golden age. Now, by no means do all economists agree. Some say, ho-hum, been there, done that, cycles happen. Modern economies fluctuate, they maintain, and this, they say, is a normal uptick in a normal economy. Gentlemen, most distinguished panel, thank you so much for joining us. Let us go around the room quickly with a simple question, starting with you, Charlie Schultze. Is this a new American golden age?
Golden, I'm not sure. Silver, probably. Will it last forever? Who knows? But we are doing well when it comes to avoiding fluctuations, keeping unemployment relatively low and inflation relatively low. We're doing well. We're likely to continue to do well for the reasonably foreseeable future, partly because we're managing it better and avoiding some of the mistakes that in the past gave us deep recessions.
Jim Glassman.
I think we are in an economic golden age, but I would say it's not perpetual, and there will be interruptions, but something major has changed.
Alan Reynolds.
Things always look good before they look worse. The economy has performed very well for about 15 years, even including the little mini recession of 1991. Wasn't much of a big deal. My feeling is that the economy is in a low inflation mode worldwide, and that's been the biggest surprise, and that's been what the source of many of the feelings that this is something different. Low inflation is something we haven't been accustomed to for a long time.
Herb Stein, you better be gloomy now.
I'm not gloomy, but I don't think we're in a golden age, if by that you mean an age that is distinctly different from or better than what we have experienced before. I think maybe we're in a golden quarter, but a good age, an age is a long time.
Golden decade?
I look back at my age, 81 years, and those 81 years per capita output in America grew at an average rate of 1.7% per year. In the last 17 years, since 1980, which is a convenient breaking point,
Right.
we grew at 1.6% per year. That's not a big, it's not a big difference, and
Well,
it's not on
but-
the golden side.
But in the last 6 to 7 quarters, we have grown
well,
at
that's
3
why I say golden quarters. Yeah, we've had
Quarters,
some golden
and
quarters.
you've now made it plural. You've now
Ages are longer than quarters, and you shouldn't judge by quarters.
Right,
I
but-
think I agree with Charlie. Are you going to debate with me, or you want to hear my answer?
Maybe both, right?
I agree with Charlie that we are in a period in which we can expect greater stability than we had in the period, say, from 1969 to 1983 or so, because we learned something from that, or at least a certain number of people have learned something from that. But of course, those people are not going to live forever, and we will get a new generation that didn't learn those lessons, and then we maybe have problems again.
A lot of this does depend on what the starting point is, and Herb says 1980 is a good breaking point, but actually 1980 was just before a pretty severe recession. I mean, if we start the current cycle, which really began after the recession was over in '82, we've had a lot more growth.
What was
than
the
that.
depth of the recession?
We've had over 15 years. For the first time in American history, we've had a 15-year stretch in which there's only been one shallow recession. That's never happened before. Now, is it an anomaly? I don't think so.
Of course, we don't want to be too provincial about this. And China and India may be in golden ages for their economies. Probably are having something that they never had before, and are likely to continue to have something they never have had before. And that's an awful lot of the world's population. But
that ultimately is beneficial to us.
well, it's good for us.
And other areas are having trouble. Japan, Southeast Asia.
Listen, let me make the case. Herb Stein and Charlie Schultze, if I were you, between you must have about 400 years of experience in managing this economy, which some other people are now saying golden, all right? You were the chairman of the Council of Economic Advisors. You were the chairman of the Council of Economic Advisors. You and the luminaries in your profession were saying we need more free trade, we need deregulation, wouldn't the end of the Cold War be wonderful? We have to go to markets, et cetera, et cetera, et cetera. Now, the world, led by America, has done that. Why don't you guys say, you asked the doctor what to do, we told you what to do, you did it, and now you're better than ever before. Aren't we wonderful?
Because that's
And
not right.
Do I
It's
have to
not
write?
right.
Do I have to write your public relations
Not right.
copy for you? Yeah.
Look, what counts in an economy? In the simplest terms, it's living standards. It's kind of real income.
Right.
Put aside some problems of measuring it. How fast is that growing? And in the United States, if you cut through the business cycles, and the business cycles are getting smaller, if you cut through that, we're not growing all that fast.
If you talk about living standards, as you know, it is very difficult to gauge those standards. But when you look at things like, the average size of a house, it's doubled in 20 years. The number of people with
And it probably doubled before
telephones,
that.
color TVs, how many cars they have. All these figures have gone up and up and up.
Yeah, but these figures have been going up and up and up.
For 100
in the year when I was born, because I've been studying that, there were 3 million cars in automobiles in the United States. Now there are 100 million. We've had an enormous improvement in living standards in this century. I don't think it has accelerated greatly in the last 10 years.
Maybe
and
we've
it's
been
very
living-
hard for me to, it's probably a lack of imagination, very hard for me to see how in 50 years from now people are going to live much differently or better than they do now. But surely they will live better, but I do not think we will see a repetition of the improvement, of the change in the quality of life that came with the automobile, with the air conditioning, and with the telephone, and some of the innovations that we've had in my lifetime.
But Herb,
Computers and
just to
fax
go back to
machines.
Ben's question, why hasn't it? I mean, so much has changed as far as federal, as far as government policy is concerned. We have deregulated.
Because a lot of you people terribly exaggerated the adverse consequences of some of these government policies. And of course, we are smoking less. We are correcting some errors that we previously made, and I think those errors were mainly about the stability of the economy. But we've had in most of this century, we had a fairly free market economy in the U.S. The big difference is in the countries I mentioned earlier, China and India, but we haven't had a drastic change in the degree of economic freedom in America at any time.
Alan,
in this
you
century.
agree with that?
Well, I think it's where we're getting a little off straight. We go to 15-year periods, and you talk about 6 quarters. Let's take 4 years, let's say. Past 4 years, economy grew 2.65%. That's not startlingly fast. The progress is occurring. Progress is occurring in ways that we probably aren't measuring. Quality of life, new products, technology, all those things are wonderful. But the question of the golden age is, has suddenly something different happened? Well, this year we've had some high GDP numbers. That appears to be inventory growth. That doesn't keep going very long with the stuff stockpiles on the shelves.
How do you explain the question that I asked before? Was if we did all these things that the economics profession, certainly the free market side of the economics profession, said you ought to do, these are big, fat, structural changes.
Yep.
We did them, and now you're saying, hey, nothing's changed.
No,
I don't get it.
That's not the right way to look at it.
Things, first place, for 50 years, the United States, being mainly in the leadership, has kind of freed trade. Trade barriers have come down and down and down, and it's obviously helped the world. There were periods in the past that we had free trade also. It isn't as if we discovered something new. Herb and I are not saying that things aren't improving. At least I don't think they are improving. The question is, if you're going to talk about a golden age, you want to look at something over a fairly long
But when you
sweep
say
of
they're
time.
improving, are you prepared then to say that instead of growing at 1.7% over your lifetime, is that what you said, we will grow
Per
at
capita, I think it was. Wasn't it?
Yeah, per capita.
Per capita.
per capita, that we would be growing at instead of 1.7, 2.5, 2.7, 3.0?
Not per capita, no.
No, those are you're doubling. I mean, if you say go from 1.7 to 2, but it took a lot of improvement during those 80 years to reach the to sustain the 1.7. You talked about this new age of science and technology. Well, this was always an age. This is a long age of scientific and technological advance, and we haven't seen anything, or at least I haven't seen anything, that looks like the introduction of the steam engine, or the electric engine, or the gasoline engine, or a lot of other things that we
You don't think
Ben.
the personal computer is similar to the steam engine?
No.
No?
Not at all.
That's a generational thing.
Well, I mean,
You and I probably do.
I certainly
It's
do.
amazing.
I mean,
Amazing.
Because
it
you don't-
allows
you don't remember before we had the steam engine.
I do remember typing on an upright typewriter.
It's probably about the same as indoor privies.
Well, look at Marcel Proust wrote those wonderful books with a pen and paper, lying in bed. I mean, he didn't need a didn't need a word processor.
But you know as well as I do. I mean, computers are not just word
No,
processors.
sure. That's
You know,
right.
They're certainly there are ways to get information around very quickly.
I think they are, but I think that but I'm just calling attention to the fact that we had other radical innovations in the past.
I'm a little amused because I came here prepared to defend the thesis that something is new and something is better, and we've been talking about something else. What is new, I think, and what is better, and what will probably last for a while, even if not forever, is our stabilization of this economy. Ever since the Great Depression, politics in the United States, the economics and politics, have been wrapped up, not with long-term growth. I mean, that's not been a big, the presidents don't get elected on that or get thrown out of office on that. What they did get elected or thrown out of office on is inflation and unemployment, the ups and downs, and that, I think there has been progress. We are doing better for a lot of reasons we can talk about, but we are doing better, and we're likely to continue to do better for some time.
The
there are threats.
The
there are some
fluctuations
threats.
have been much narrower.
That's right.
than
And
they were
not
in
only
the-
that, we have kind of combined low employment, low unemployment, and low inflation better than we have for maybe 30-some years. And that probably will continue for a while. That is different. That is good. That adds to human welfare. It's not the same thing as saying, are we in a new golden age
But it's a silver age.
long-term growth and living standards going through the roof.
But I would say that's part of that's part of a golden age, is low unemployment.
No, I mean,
low
I'm
inflation.
not going to argue that. All I'm saying is they're two different things. And
Why is the stock market up so high, Jim?
In anticipation of corporate profits being higher now. Maybe it may have gotten ahead of itself. I think there's certainly a case to be made for that. The stock market doesn't move exactly the way the economy does or the way that corporate profits do, but over time there's a very, very distinct correlation between those things. And I think that, the stock market is saying, maybe it's not saying we're going to be in a golden age, but it's certainly saying that it's looking ahead to much better economic times. And I think for all the reasons that we've talked about here, because of deregulation, because of lower taxes, because of the globalization of world of trade,
as Charlie says, we've smoothed out the business cycle, eliminating some of those negatives.
Well, that
means more growth.
That is very important.
I mean,
We're right now in a period with more stability than any time in the last 25 years. That is the sort of the fluctuations of GDP and inflation and so forth. And so that investors can look out into the future. They may be wrong, but this is what they're doing. They're looking out into the future and they're saying, I can commit my money for a longer amount of time, and that tends to drive up stock prices.
First of all, inflations and recessions are always a surprise, and when people say that they're all over with, you're forecasting, and you're welcome to forecast. I forecast they're not over with, neither of those phenomena, and that something like the dollar collapsing, foreign central banks stop supporting it, will surprise us.
Chaos
The oil
in-
crisis,
chaos in
the
Asia.
war, chaos in Southeast Asia,
Which is
could
what
cause
we have apparently
could
now,
cause all
right?
kinds of problems for us. It causes good things too. Price of copper goes down. That's an input into production process, but it also causes trouble. And then the stock market clearly has been reacting more than anything else to reacting, not anticipating, changes in interest rates. Interest rates went up in '94. The stock market was dead flat. You can actually correlate very closely the price earnings ratio turned upside down, the ratio of earnings to prices, with stock market moves not only weekly, monthly, but even daily.
I think there's something common, in a way, I agree with Jim on this, in what's driving the stock market and what's keeping the economy from having these fluctuations. The biggest single thing that's led to recession in the post-war era, not the only thing, but the biggest single thing has been inflation. Inflation got out of hand for one reason or the other, and then the Fed had to come in and rein it in, and you have to overdo it, and it gave us recessions. The stock market hates inflation, not quite so much because of inflation itself, but because they know it's going to be followed by at least a temporary period of recession and lousy profits. Now, if you look at the stock market, not just in the last 3 years, it's been on a roll since 1982. And I think it was starting in 1982. In a long-term sense, we've been bringing inflation down and keeping it low, and the stock market loves that. So I think there's an important connection between why the economy is stable, we've done a better job in controlling inflation, why is the stock market booming?
I don't know why the stock market is so high, but I'm interested in the notion that we have had a reappraisal of the risk premium that's required for investment in equities. And we've discovered that over the long period, equities did yield so much more than fixed income securities. And we have realized that if you take a fairly long view of investment in equities, you can afford to invest at what looks like a higher price earnings ratio than we formerly thought was necessary. And that may be a permanent shift.
Let me just go to a couple of charts here and then ask your opinions about them. Inflation has come down at the same time that unemployment has come down. Now, in a classical model, or classical modern model, when unemployment goes down, inflation is supposed to go up.
And that's not the classical model.
Keynesian model.
That's the Keynesian
No,
model.
it's
I said the classical modern model.
No,
That's okay,
Well,
fine.
you got ages in class.
Right, okay, well, it's a
Well, but it is true, Ben. That's what a lot of people believe, and a lot of people have been told. I would say most of the press believes that, but
That
it's just not
that
true.
if the cost of labor, that if competition for labor becomes more intense, wages go up, and that triggers inflation. I'm not saying I agree with that, but that has been the accepted notion. Forget the word
the
classical.
Phillips curve.
What?
The Phillips
The
curve.
Phillips
that's
curve,
called.
right.
But it's been repudiated, I think.
Well, the modern quote unquote theory of this is that when unemployment is above kind of a critical level,
Right.
inflation will fall. Now, unemployment can be above it by 5 percentage points or 1 percentage point, but inflation will continue falling. When unemployment gets below that critical level, inflation will turn around again. What we've discovered and surprised people, I think, is that critical level of unemployment is much lower than we thought it was. It
Yeah, only a
used to-
few years ago they were saying it was
6%.
6%.
Yeah.
And
Now,
we're-
we don't know.
we're at
Now you ask,
4.9.
why has that happened? That's another discussion. But the point is not so much that inflation and unemployment move together. It's that very low unemployment is supposed to tick up inflation, and high unemployment is supposed to keep it going down.
Is what we are talking about here an American phenomenon or a global phenomenon? I mean, you have
American.
American.
That
Well,
last point is American.
well, the
Europe's
inflation-
just the opposite.
Inflation is clearly global. Inflation came down even faster in Japan than in the United States, faster in Europe too.
But
until very
Europe has
recently.
13% unemployment.
sure,
but
that's
their stock
consistent with the
market has
theory.
been flying.
Low interest, inflation gives you low interest rates, gives you a good stock market. That's the
Well, and
point.
it's flying for other reasons too. I mean, Europe is finally restructuring its businesses. Its businesses are becoming much more efficient. That's what happened in this country. Businesses are more productive. They're making more money. I want to say one other thing about inflation. Charlie's right. I mean, we have always worried about inflation, but we may start to worry about, or we should start worrying about, its opposite, which is deflation. Deflation is potentially a serious problem, and that is falling prices. Japan just suffered through a bout of that, and it's very difficult to encourage growth when prices are falling because people don't want to buy things. They're waiting for the price to drop further in the next month. We now have a currency crisis in Southeast Asia, and one response to that is going to be, I think, a dumping of lots and lots of exports in this country, further driving down prices. So the corporations won't have any, already corporations don't have much pricing power, as it's called, and profits are going to fall, and that could lead to unemployment. Now, I don't know if this scenario is necessarily going to play out, but frequently recessions come from things that you don't expect, and this is one thing I think people should be aware of.
You have lived through a deflationary period in the 1930s.
Yes, I did.
Are you concerned about what Jim Glassman is talking about?
Well, just slightly. I mean, we got that period in the 1930s through abysmal failures of monetary policy, and I don't think we're going to repeat that. So that I think whatever these exogenous factors are, in the end, we depend on the monetary authority, the Federal Reserve, to compensate for them, to moderate them, and I think that's why we've been successful in the last 10 or 12 years, and I don't see why this shouldn't continue, except for the fact that Alan Greenspan will not live forever, and we'll get somebody else who may not remember that.
Has he been that good? I mean, is it one person? Can one person
Well,
do something like that?
I take him as a symbol of those people who are traumatized by the great inflation, for whom the inflation was the great evil, and who are being very cautious of it. I think Paul Volcker was also in that category, and what I'm worried about, and I'm not terribly worried, but I'm worried that we will outlive that generation and make mistakes again.
I just want to go back to one thing to wrap this up, to what Herb said earlier, that this change that we're going through is not just focused on these few years, but we've had enormous change through this whole century, the steam engine, electricity, whatever. And yet you poo-poo the idea that we're in a golden age. Let's go backwards and say, is it perhaps true that we are living in a golden century?
Oh yes, I think in terms of economics, of course, this is the most horrible century in history
Right.
in many ways. Right. But if you compare the beginning and the end of it and leave out all the horrors in the middle, this has been a golden age economically for all the countries that are now fairly well off, and it is beginning to be the golden age for countries that are just entering into this new world, that is India and China I particularly mentioned. There are a lot of countries down in Africa that are still far from it, but it has been a golden century economically.
I knew that I could end this on an optimistic note some way. Thank you very much, Herb Stein, Charles Schultze, Alan Reynolds, and James Glassman, and thank you. For Think Tank, I'm Ben Wattenberg.
We at Think Tank depend on your views to make our show better. Please send your questions and comments to New River Media, 1150 17th Street Northwest, Washington, D.C. 20036. Or email us at thinktank@pbs.org. To learn more about Think Tank, visit PBS online at www.pbs.org. And please let us know where you watch Think Tank.
This has been a production of BJW Incorporated in association with New River Media, which are solely responsible for its content.